And good afternoon. Welcome, everyone, to Tilson Live. So glad to see you. I'm Eric Allard with Tilson Homes, Senior Vice President, part of the fourth generation of the Tilson family. Grateful that you're here today. So please jump in and tell us where you're coming from, because we also have, as we do every single week, award-winning finalist for Marketing Professional of the Year for the Texas Association of Builders, the one and only Mrs. Dawn Dantzler.
Hey, everybody.
She loves being doted over, by the way, everyone. So feel free to join in on the doting. Please jump in. Tell us where you're watching from. Looking forward to seeing everybody here. We are live on Facebook. We're live on YouTube. And we are here to answer a bunch of questions about, hey, Conroe, Texas. Yeah, the place of my birth, as it is. They have since bulldozed the hospital, so don't worry. We won't have this mistake happen ever again. Anyway, yeah. So, gal, post your questions in the chat. Post where you're watching from. All right, Neil from Mansfield, Texas. Looking forward to seeing you and talking to you. Post where you're watching from. Post questions, because we are talking about what today, Dawn?
We are talking about financing your new home. So this is one thing that Tilson does very differently than other custom builders. So it's something we wanted to take the time to talk about, what we do and how it's different. So got Markham, Dallas,
by God, Texas,
Tucson, 10 acres.
10 acres in Mako. All right.
Phoenix, Arizona, just bought property in Greenville.
Out 380, just east of our Melissa place.
Roberts and Conroe,
Houston. All right.
Awesome.
Now you're getting real clear. I'm not from Conroe. Conroe just at the time happened to be the closest hospital to where my family was. So back then, you had to milk your own cows and go harvest, eggs from chickens and things like that. And that was, but anyway, good old Montgomery County. That is my hometown.
Awesome.
Anyway, pile in, ask us all your questions about financing. A little bit different format today. Ordinarily, It's ask questions as we go, which you're still welcome to do. We do encourage your questions. But because I went to vocational school at Texas A&M, and math is hard, we got some mathematics to do through this one. And so we will have questions Dawn?
At the end. So we're going to go ahead and run through the whole presentation and explain the whole thing. And then we'll stop at that. We'll answer everybody's questions when we're done. But like Eric was saying, this is a little bit more complicated. There's some math involved. So we want to make sure that we get through everything before we stop for questions, because it could just confuse everybody.
Not y'all we're worried about. It's me.
It's us.
We're worried about us. So, yeah, but this is the one thing we know, guys, that you can have the most beautiful home. You can have a great design. You have a beautiful piece of property. Mm-hmm. But until we can kind of figure out, or someone's comfortable with how in the world we're going to pay for this thing, most prospects are not prepared to move forward. And so we know that this is a really important part. This is where the rubber meets the road, the monthly payment, how that's going to work. What happens to my property? Is it safe? What if you what happens if a lien gets put on it? How does that work? We want to be sure that you have pure transparency, all the clarity on this process that you could possibly have, so that you are a prepared buyer, can ask the right questions, make the right decisions for you and your family. And that's really what today is about. So
awesome.
Well, I agree.
We agree, Wesley. Nydia is awesome.
Yep. She's very awesome. And so, she's not originally from Melissa, but she does a great job there. Does a great job there. So yeah, we want to talk about, we're going to talk a little bit about construction loans. Even though that's not what we do, we're going to talk about that so that we can build kind of a clear picture of what that means for folks. Because if you're going to build a custom home, pretty much anywhere, but certainly here in Texas, 99% of builders are going to require some type of construction loan or interim financing or draw schedule. So we're going to talk a little bit about that, build some structure around that, so that we can maybe help you guys understand kind of how we do what we do and why we're doing. So,
right.
Yeah, I see. So keep questions coming in. I see questions about lumber prices. You can ask questions about that. We'll talk lumber pricing. We can talk interest rates. We can talk appraisals. We can talk surveys. We can talk everything that needs to happen to get a home secured and closed on. We want to talk about all that stuff with you guys. And again, we hope it's not. It's a lot of mechanics, a lot of. Oh, look at that! Look what Faith is saying.
Oh, thank you, Faith. She's so sweet.
Just saying. All right, so let's get going here. Dawn, will you please tell us what in the world we're doing here, talking about how we do that? And what's funny is we actually had someone correct our email about new construction versus no construction. And it truly is like, you truly can build your home.
Yep, without a construction loan. And that's something that we tell people all the time. But first, we kind of want to explain, for those of you who may not be familiar, what a construction loan actually is. To be clear, this is not what Tilson does, but this is what 99% of builders do. So if you are building a custom home on your land, you will come across the terms. Construction loan, just kind of wanted to explain what that is. So most home builders are going to require their customer to pay the cost of their home, the cost for their home during construction. So to do that, you're usually going to have to borrow money from a bank, and that comes in the form of a construction loan. So a construction loan is a short-term, higher interest loan. You're generally going to see 1% to 2% higher than whatever the going mortgage rate is. They are going to have a pretty standard hard equity requirement. It's usually going to be around 20% that they want you to have into the deal, just to secure their interest. And it's going to pay off any loan that you have on your land, and that roll that into the construction loan amount. So there's just one lender going on. Usually a construction loan is going to last about 12 to 18 months. And the money on that loan is going to be paid out in stages as work on the home as it progresses. So, once you initially sign your contract and you close on your construction loan, they'll pay out an initial, I think it's usually 10% at that point. And then as you hit different milestones throughout the build, they will pay the builder more and more as it goes on.
Yeah, there's inspections along the way, so that can tend to slow the project down. Because it does have to be inspected for them to release those funds. And I wanted to point out real quick that the shorter term, higher interest, the reason it's high, it's not a punitive thing for the buyer. It's simply it's shorter term, so they need to turn their money, they need to make more money on their money. That's what banks do.
Right.
And the stakeholders in the bank are expecting a certain return on that money. And so if you're only lending it out for 12 to 18 months, like Don's saying, they're going to expect a higher return on that investment.
Right.
And so the other thing is it's also riskier. Construction loans are riskier than a permanent loan because you're dealing with an unfinished home. And right now, no homes are hard to sell. Right. We're in May of 2021, but certainly unfinished homes are harder to sell than finished homes, statistically.
Right.
From a risk standpoint. So that's why that's why they want more equity in the project. And that's why they're going to charge a higher rate. It is a higher risk loan.
Absolutely. So what's going to happen with that loan is, as I mentioned, it's getting paid out in phases. So your interest is going to accrue on however much money is being loaned out at the time. So the amount of interest and the amount that's lended out increases as you progress through the build. Now, with some construction loans, all you're going to be paying is interest only throughout construction. So as you go on, your payment's going to get higher and higher as that interest starts to accrue. We talked about, if you guys remember the old taxi cab, when you had the meter running, as soon as that money is pulled out, the meter starts running and you're accruing interest and you're making those payments. Some construction loans, if you see them reference no payments during construction, that means you're not paying down any of that interest, but all that interest is accruing, and it's all going to roll into your final mortgage. So it's just increasing the cost of your home at the end and what you're borrowing when you do the final mortgage. There are also some other costs associated with getting the loan, like any loans. You're going to have an origination fee, you're going to have a title check, you're going to have closing costs, all of that. Usually that's about 3% of the loan amount that gets added on. So what do we do that's different? Tilson, we decided very early on that we didn't want to go through this process. So we are going to actually pay for the construction of your home using our own money. So we're not asking our customer to borrow money. We have the financial wherewithal to actually pay for the full construction of your home on our own. So that means there's going to be no interest and no payments for you because there's no official loan for that. We're using our money to do it.
That's right.
So what does that mean for you? That means that you're usually able to build your home sooner and for less total expense than you would with other builders, because you don't have to we're not requiring that 20% equity in that. There's, any of that process going on. So you're going to have no construction loan and none of those associated costs and fees. You're going to have no monthly payments during construction. No down payment as long as you already have 10% equity in the project. And that's a lower equity than what you would see with a construction loan. Like I mentioned, they want 20, we want 10. You'd have 10%. And it's just more money in your pocket. So all of that money that would have gone into construction loan fees, interest, all of that, you can actually put into your home or just save it for a rainy day. And then also, this is something we feel is kind of important. Like, you have the peace of mind of knowing that we are financially secure enough to pay for the homes that we have under construction. You don't have to worry that we need your money to build your home.
Yeah, that's the, having that peace of mind that, Tilson has the financial wherewithal to do this. And I get paid to the end. Like that really speaks volumes as to who you're working with.
Absolutely.
So now
it's time for math.
What does it really mean? Because that's all real warm and fuzzy, Dawn. It really has great, that markets well.
Yes.
The bottom line, back pocket, what does this mean for my family and me? Well, so let's do having a little example family here. So we got home price $300,000. So that's the price of your new custom home. Let's say your land value is $75,000. So the total value, the day that you're done with this home, you can put a for sale sign up there and sell it for $375,000. The price of the house plus the price of the land. That's what it's worth. Let's just assume it appraises for that. And let's say that you put $40,000 down on that land, or maybe you put $20,000. You've paid another $20,000 into it over the last 7 or 8 years. But overall, you have $40,000 into the land, so you owe $35,000 still. So the total value on the construction loan side, we'll start with the Tilson EasyBuy because it's super easy. That's why we'll start.
Yeah, super easy. Easy math.
Super easy. So total value, $375,000. Tilson's going to require 10% of that number, the total value of it based on the appraisal. And that would be, just move the decimal over, I learned. So $37,500. The customer has $40,000 in the land. So in this particular case, all they would have to put down is a $1,500 deposit with us, which, by the way, they get credited back at closing, and we're off to the races. They do not have to put any more money down with us. They can if they want to, but they don't have to. Now, that's easy. Let's go to the construction loan side. And by the way, there's nothing illegal about a construction loan, nothing unethical about it. It's how, like we said, almost every custom home is built. They're just expensive and unpredictable.
Right.
And so we think our customers deserve more security than that. And more for their money. So construction loan. All right. Same thing. Total value is still $375,000. That doesn't change. Now, most construction lenders are going to require a 20% equity. And these days we're seeing sometimes 25% equity position, but for sure 20% equity position. So again, that 20% of $375,000 is now $75,000. So double the amount of the 10%, 37.5 times 2, 75,000. So you're for sure going to need, because right now they have $40,000 paid into the land. They're going to need another $35,000 in cash up front to get the engine started. They could get that credit at closing if their permanent doesn't require 20%. If the permanent just requires maybe 90%, or I'm sorry, 10% down.
10%.
But for sure, to get the engine started and get the ball rolling and get this house built, you're going to need to put that $35,000 in cash down. So total loan amount is going to be $300,000. You're going to have another 3% or so, like Dawn spoke about, in construction loan fees. So to close on the construction loan. Now, this is not the permanent loan. This is just the construction loan. There's $9,000 gone. Like, there is no getting that back. It's not a deposit. It's not credited to anything. It's just fees to get things going. So total cash you're going to need to start is that $35,000 to get you that 20% equity position, plus the $9,000 in construction loan closing cost. That's $44,000, plus whatever the builder's going to require as a deposit, and $1,500, one of the lowest in the industry.
Right.
So you're paying a lot more money out up front. Now, this is a really confusing one, Dawn. Could you please tell us how in the world?
So when we started putting this together, we were trying to figure out, okay, how do we calculate construction loan interest? And this, quite honestly, is the most terrifying thing I've ever heard about a loan. But this is from the Construction Loan Center. So during construction, a construction loan's payments are based on the loan amount actually drawn. It is therefore more difficult, if not impossible, to accurately estimate what the payments will actually be, as the loan amount is subject to change at any one time. So that's kind of the, keep in mind, grain of salt, all the numbers that we're going to show. We don't know exactly how much interest is happening because the longer it takes, the more that's pulled out, things like that. This number is going to go up. But according to this website, a good way to kind of figure it out is to take 70% of the loan amount and use a simple interest calculator to figure out the monthly payments, multiply those results by 12, and that's going to give you a good guesstimate as to what that construction loan is going to cost you. So we're going with that for the rest of our math.
So bear with us.
Bear with us.
All right. So now we got to calculate the interest on this. And by the way, Wendy, I did see your comment. You just commented to yourself. You are correct. It is a little more than 10%, actually almost 11% interest. 11% equity. So you're good. Mm-hmm. You're correct. You got it.
Yes.
What Tilson doesn't make you do to build a home. Remember, this is not what we do.
This isn't us. This is just for comparison.
Yeah, this is to compare. So on that construction loan, like we've already said, you got to put $35,000 down to get to that 20% equity position. Got the $9,000 gone forever, $44,000 plus builder deposit. So start the end. Now, that's going to cost you money, like Dawn just said, during construction. So interest calculation, let's figure about 70% of the $300,000 contract price of the home. That's about $210,000. We're calculating about 4.5% interest. It's about the going rate.
Mm-hmm.
So that's $9,450 in interest, also gone forever. Like that's just the cost to borrow that bank's money during construction. They're not going to loan you that money for free. They can't. Their stakeholders require that they have a return on their money. All right. So the total paid that you will never get back, $9,450 plus $9,000 in closing costs of the construction loan, $18,450 that's just gone. Like that's not an equity. It's not credited to you. It's not a deposit. It's gone. And then you got your $35,000, which is in fact equity.
Yes.
Plus your builder deposit, and depending on how that works, how your builder works with that, that's how that works. But for sure, that's $18,450, or in these days, about half of a lumber package that you'll never get back. And you can't use it towards upgrades. You can't pay it down on the loan. You can't that's pay to play.
Right.
So compared to Tilson's EasyBuy in this particular case, $1,500 deposit versus doing a construction loan, which would be $53,450 plus whatever the builder deposit is out of your pocket. That's hard to compare. And these are not exaggerations. Like we've had customers bring us examples just like this and say, this is what I'm looking at paying. This is what they quoted me. This is what we're doing. Like we didn't dream these numbers up. We've got these numbers from customers doing construction loans. So now I can already see the questions flowing in, and I have my high-speed, low-drag whiteboard, the coveted Tilson whiteboard. Probably want to go back to this example for Wendy, just for the here. So she was saying they've got 40,000 into the land on a total of 375. So yes, it's 10.67% interest. So yeah. You're not misunderstanding. You got it right. But Tilson's requirement is 10% minimum. You can have 11, 12, 20, 30, 40% if you want to. But if you have 10% equity, you don't have to have a down payment with us. That's why. So great question.
Yeah.
And there are no bad questions, guys. So ask all of your financing type questions. Yes, we'll talk about how to get a mortgage. We're talking about all that stuff. We're prepared to do math if we have to. But
absolutely.
We're glad to help in any way that we can. So, Dawn, I see some of these questions coming in. Let's see if we can answer.
I'm just going to scroll to the top and start with the questions. Keaton is actually asking about the Hidalgo and if it will be replaced with a 4-bedroom plan. And yes, that is the current plan. What's going in there will also be a 4-bedroom.
So yes.
Yes. And then he's asking about lumber prices. Will prices keep rising a lot from lumber prices and all supply prices skyrocketing?
All right, Keaton. I wish I knew the answer to that question. We would love to be able to forecast that way. What I will say is, even if lumber prices quit going up at the rate that they are, and then by the way, the reason lumber is getting such attention is because it's just going up the fastest and the hardest.
Right.
It is not the only thing by any stretch that's going up. It's just it's the clanging cymbal. So concrete is up, steel is way up, actually not far behind lumber. Sheetrock is up, labor is outrageously up. Why? Well, because there's demand everywhere. The article I read this morning, I was talking to you about, Don, that housing starts for April were down 13% from March. Why is that? Are we softening?
We ran out of land. People
Exactly.
ran out of land. They ran out of supplies. Like
there's no labor, there's no supplies. The production builders ran out of lots that were developed. So it is not an indicator. Be very leery of headlines. They are clickbait for a reason. You're supposed to click on it, read the whole article.
Yeah.
And so the article was housing starts are slumping in April, down 13%. Well, because there was no one to build them. There was nothing to build with and no one to build them. So what are you going to do? The contracts are still in place. And there are production builders out there. They're pouring slabs, just leaving the slabs out there, like not starting framing on them. And that's a real thing. And that's understandable. So
absolutely.
All right. What other questions? So to deal with that, even if lumber doesn't keep going up, all that's going to mean is the prices may not be skyrocketing. Hopefully they won't keep skyrocketing. Hopefully what they'll do is just not rise as quickly. They are not coming down anytime in the next 14 to 18 months that we can see. And I was on the phone with our CEO, my uncle, and he was about to jump on a call with the NAHB, National Association of Home Builders, to find out what they're doing in DC to try and get, Canadian soft lumber. How do we do that? Tariffs.
Right.
Like trying to figure out ways that we can ease this pain on the whole industry. And at the end of the day, on the consumer, the people that are trying to buy these houses. So it's not coming down. There's no article out there. Wall Street Journal, CNBC, Politico, The Hill. I've combed the internet. There's nothing out there to support that prices are going to come down because demand is still white hot and supply is at zero.
Right. Exactly. Okay. Valerie is asking, what does your credit score have to be to start or be approved for a home?
Well, we're hearing these days, and I got on a call with Matt Howe with AmCap Mortgage this morning to have some prep. We do show prep, by the way, just so y'all know. We do show prep. And so, speaking with him, they've been doing work for us for about 17 years. We're looking safe to say 680. That's where you really need to be. There are some programs out there for people in the 620s to 640s. They're few and far between, and they're not very attractive programs. 680 is what you need to be shooting for.
Okay, great. Will was just giving a shout out to Eli as superintendent and Cheyenne as sales consultant, building an Oasis B in Delta County. Thank you for sharing. We will pass that on.
Well, appreciate that.
Wesley was asking if we could also talk about getting a mortgage. He says he has the full amount to completely pay off our new home, but they'd like to have just a small mortgage so that we have some money to do some things with once the home is completed. What would be the best way to do this?
Yeah, so I don't know the minimum, Wesley. So that's a great question. I do know that there is one though. I want to say it's somewhere probably in the $70,000 to $80,000 range. Most banks, when you're at not bank mortgage company, when you're asking them to tie that money up for 10, 15, 20, 30 years, there's a certain amount of money below which is not worth their while.
Right.
So it really needs to be, and I think that number is probably somewhere in the north of the $70,000 mark. But so if you want to have a $350,000 house and put $280,000 down on it and have a $70,000 mortgage, you could do that, or a $150,000 mortgage. But it's what we were these examples that we built around were for minimums. The minimum you need to have down. You can put more down if you want to. There's no problem with that. Up to a certain amount, like I said, it becomes unattractive to lock in. For a mortgage company, put yourself from an investor standpoint. Like I wouldn't want to, from someone who plans to retire at some point. I don't know if that's ever going to happen, but I might. Who knows? I wouldn't want to guarantee my money be tied up for 30 years at 2.9%, unless there was a whole bunch of more money. So that's kind of put yourself in their shoes for a little bit and understand that that's kind of like a thing.
Okay. Makes sense. Let's see. Kenneth is talking. He's starting his new SSD in Brazoria County sometime in the next 5 weeks. Awesome.
Cool. Let's see. Do your anti-rain dance, Kenneth. Try to do an anti-rain
dance.
Dance.
Yes. Make it stop raining. That'll make it a lot easier for us. Wendy is asking for clarification that the $1,500 deposit is separate from the equity down payment. Correct.
That is correct.
That is
yeah,
correct.
$1,500. Yeah, that part is a non-refundable deposit that is credited at your closing cost.
Mm-hmm. All right. Andrea is asking, what if the land, when you guys appraisal, is more than what I have in the land? Would that be counted as equity? Yes.
Yes, it would. Yes, it would. And it may very well be, particularly, Andrea, if you've had the property for more than a couple, 5, 6, 7 years. I mean, ideally, land is one of those things that continues to appreciate in value, broadly speaking, over time, because there aren't making any new land. There's only a finite amount of land. So
I think they're making some in Hawaii, like as the volcanoes do, but not in Texas.
Fair point.
We're done. Donna is asking, is the land value used based on CAD?
So the county appraisal district, no, it is not. That is a good loose, if you're looking for just kind of a quick number before an appraisal is actually done, that's not a bad place to start. I will tell you that typically speaking, the county appraisal districts, those values on there are historically a little low. Although believe me, they're going to be going after them this year. They're going to be appraising you higher. So, but historically they're more like probably 85% of the actual value. Not always, but generally speaking, that's the case.
Okay.
So no, the land value is going to be based on an actual appraisal done by a TREC licensed appraiser.
So we do an appraisal on your finished home as we're planning to build it. So they get the actual plans for your house and look at the land and do a normal appraisal that you'd see. So they're comparing to comps in the area, looking at other homes that are similar in size that have sold to get that appraised value.
Precisely.
All right. So Blair is asking, if land is paid off, is that subtracted for equity? Like $300,000 house, $18,000 land paid off. What would cash needed be to meet 10% equity?
Okay. Oh, I get to play. I get to play with my math. Okay. So Blair, I'm glad you asked. So what she's asking is, same example. We got a $300,000 home, and the land as I understand, the land is worth $18,000, and she owes nothing on it.
She owes zero. Yes.
So the total value, the day that we're done with that house, they could sell it for $318,000. Okay, we need 10% of that number paid into the home, which would be $31,800. So she has 18 in it now. So we back out that 18 that's into it. And that is 22.2. Is that right? Did I get that right? No.
Yes.
No, I don't think so. I think it's 23.8. Am I wrong? We're going to do it right. We're going to get it right. Boom, 13.8. Okay, so 13.8. Well, I hope my mom's not watching. She's going to be very disappointed in
we don't math.
Montgomery ISD / Texas A&M education. So you would need 13,800 down to get to the 10%. Does that make sense? So you've got, starting at the top, $300,000 loan, $18,000 that you had that the land is worth. Now, that's assuming it appraises at exactly that. If it appraises for more, you may not have to have as much of a down payment. But let's say it appraises for exactly the $18,000 that you've paid it off. That's $318,000. 10% of that's $31,800. You already have $18,000 paid into it, so you would just need to come up with $13,800 down, and that would help you achieve 10% equity. So hopefully that makes sense.
Okay, makes sense. Aaron is saying he just purchased a lot and working on the 10% total equity. Can we move ahead with the stakeout and deposit if we're not building for a bit? Looking to find out the additional costs for the slope, clearing, etc.
Okay, so the not building for a bit could be a question. That's a bit of a weighted question, because right now prices are rising quite rapidly. So if we are unable to proceed in a fairly short fashion, then that may not be able to do that. Or you may be able to do that, but you would be subject to price increases if we were to incur them along the way. If we get to the point we're ready to build the home, which is typically ideally 6 months or less, and you're not prepared to proceed by getting up that 10% equity, then I would encourage you not to proceed. But if within about 4 to 6 months, you're going to be able to have that 10%, then yeah, you should be good to go. It's no problem. You don't have to have the 10% the day that you sign the contract with us. Just we'll have to have it before we can start construction. But we are looking at about 4 to 6 months of upfront documentation now, with lead times being what they are for geotechnical investigations and manual J's and designs and engineering and color selections and permitting. We're finding that's taking longer and longer with various counties. So if you're able to move at that pace, then you're going to be fine.
Okay, perfect. Andre is asking, for example, if I'm paying $160,000 for the land and it appraises for $200,000, is that equity that I can use?
The answer is yes, Andrea.
Yes.
If it appraises for $200,000, that's the true market value of the land.
Okay, perfect. Wesley is saying we bought land for $68,000 and the Canyon Elevation D that we are going to build, the house is said to be $416,000, and are we still going to need a $1,500 deposit?
What do you think, Don?
Yes. So you need the $1,500 deposit no matter what. That's the only cash that you'll give us unless you need a down payment in addition to that. But the 10% equity is separate from the $1,500 deposit. Let's see. Faith is familiar with Matt. She says he's amazing. So thank you.
We agree.
I'll pass that on. Wesley is asking if there's going to be another price jump like earlier this month before June 11th.
Wes, I just don't know.
I don't know. Yeah.
I mean, we look at lumber prices every Friday night when they're released. We watch them every day, but we certainly watch them every Friday, and we just have to wait and see. I mean, we don't know for sure. But I mean, the answer is there could be. We don't know for sure. So that, unfortunately, I know June 11th sounds like a long way away. That's 3 weeks, and it could come before that.
Absolutely. Juanita's asking, when do we find out what the mortgage payment will be? Will it be before the ground is broken or after the house is done? I've already sent all paperwork to AMCAT awaiting pre-construction meeting.
You will definitely know before we break ground. Yeah, they actually, so by law, they have to disclose to you in various actually promulgated forms. So forms that Housing and Urban Development, the HUD tells them thou shalt use this form and tell people what the payment's going to be, what the APR is, what the interest rate is. And by the way, your interest rate and your annual percentage rate are different slightly. We'll get into that, but it's it's generally different based on how mortgages are paid, which is in arrears. And then you're also going to have what your principal, your interest, which is your actual payment, and then your taxes and your insurance, which if they're servicing the loan, those as well. So all of that data you will have very accurate. And actually, some people get a little bit overwhelmed because they'll get updates throughout the process. Like particularly if you make some changes, add a bunch of things or delete a bunch of things. Anytime that loan amount changes by more than a certain percentage, by law, they have to
update you.
So don't let it scare you. Don't be alarmed, but it's definitely something that they have to send you. Great question. You'll know before.
Right. Okay. And Faith is asking, once we sign, we are locked in, correct?
That is correct.
Yes.
Asterisk. So Faith, yes, you were locked in so long as you are fulfilling all the owner's additional responsibilities. So we do have to start the home in a certain amount of time after the contract is executed, after the agreement's executed. The reason for that is we can't hold prices indefinitely. So because our prices are not held indefinitely.
Right.
So we're trying to forecast what these prices might go up based on historical data, which is worthless this year. And so as long as you are fulfilling those obligations, but some of the things will stop, like if there's a loan issue and not able to get a loan, if there's a title issue on the property that you're able to get cleared up, if the county is requiring that you replat the property or something like that, if the subdivision is requiring something specific about consolidating a couple of there's all kinds of, if customers making a bunch of changes and it's having to be redrawn over and over again.
Right.
Those are things that you will
we can't get access to the site.
Yeah. If it's too wet, it can't get cleared. We can't get the geotechnical investigation done. We cannot hold that price. We can't guarantee that price forever, but it's typically about 4 to 6 months, depending on what all's going on, that we are able to hold that price. So.
Okay, awesome. And then once we start construction, you're locked.
Great.
Once we start, it's not going up unless you change something.
Thank you, Dawn. Yeah.
Juanita, off-topic question. What model home has an example of a 40/60 fixed window? Do you know
406.
offhand?
I think
460.
San Jacinto. I'm going to say San Jacinto. I'm going to put my money on a San Jacinto. It used to have 406s with fixed windows above. If not, they're now 407s, but it's going to get you really, really, really close.
All right, perfect. Anna's asking, do you have a way we could access an inventory of your cabinets, flooring, etc. that you use? Right now, the way to do that would be to visit one of our design centers, and they can show you all of those options. We don't currently have that available online. All right. Savannah's asking, are there mortgage companies you work with or recommend, or do I have to find my own? We do have two preferred lenders that we like to work with. We can work with almost any mortgage company. I'm going to say any mortgage company, almost any mortgage company, but we do have great experience with AMCAP and CMG Financial. And we recommend them just because they're very much familiar with our process. Another mortgage company isn't going to understand our whole no construction loan offering. So they're going to be a little weirded out that we're asking for the appraisal as early as we are and stuff like that. So they're not going to understand. So it does take a little bit more time if you're dealing with another company. So we definitely highly recommend Matt from AMCAP and Stephanie from CMG Financial.
Yeah, and something to consider with that too is on the, and I'll talk about Matt earlier. Oddly enough, we don't have a picture of the family room of the San Jacinto on the website. Strangely. I'm looking for it. So no one can tell me I'm wrong.
Okay.
Even though I know
it's there somewhere. I'll find it for you.
So anyway, what we're finding, particularly with as long as appraisals are kind of taking right now, because again, it's not just new home construction that is exploding right now. Resales are also up. Production subdivisions are up.
Refinancing also has to have an appraisal.
Every single one of those are in line for appraisals. And what we're finding is if you go with one of our preferred lenders with AMCAP or like Don said, CMG, they'll actually start the legwork on doing that appraisal based on our work copy. So the plan that the salesperson's redlining for you at the time that you do the agreement and deposit the $1,500, we'll actually send that over. We'll send it to all the lenders that we use, but the snooty stuck-up lenders won't order the appraisal based on that. They wait until the final set of plans are done before they'll even order the appraisal. Whereas with AMCAP and CMG, they know that Tilson's good for what we're saying we're going to do. We've been doing this for 90 years. They use logic. So crazy. And they'll start the paperwork at least. They can't finalize the appraisal, but they can start it based on that work copy that's redlined. And then once the plans are completed, we obviously send those to any lender also. And then once they get them, they're like, okay, we just update it, make sure that it is what they said it was going to be. Yep, we're good to go. And they finalize it and we have it back pretty quick. Whereas with an outside lender, a lender that's not familiar with us, or we're not familiar with on your lot, they may wait till those are completely done and then order the appraisal, which is another 6 weeks to wait on the appraisal. So something to think about.
Yes, absolutely. Faith is asking if there's a final appraisal that will change our price.
No. The appraisal is not going to affect the price of your home. The house costs what it costs to build. All the appraisal can affect is how much you have to put down. But on a final appraisal, that's done at the very, very end. And what they're basically out there doing is making sure that did the builder build what they said they were going to build? You know, if we told you we're going to build a San Jacinto at 2,497 square feet, they want to verify that we did in fact build a San Jacinto that was 2,497 square feet. So that's what the final appraisal is about, and that it has good access. You know, is it access? Do we have to cross some private property to get to it? We can't have that.
Right.
Like it has to have a final drive. It has to have running water. It has to have flushing commodes. It has to have electricity. It has to have floor coverings. It has to be a finished, livable home. They're doing that as a representative of the lender. The lender is an investor, so they want to make a good investment. They're not going to invest in an unfinished home. So that's what that final appraisal is really about.
Okay, absolutely. Lauren is asking, what happens if it appraises for less?
Yep, it happens sometimes. Great question, Lauren. So if it appraises for less, then you could have to come up with money down to make up the difference. And a lot of that is driven by what's selling around there. Again, the appraisal is not based on what the house costs to build. I wish it were. That would actually be much better right now. But it is not. Appraisal is based on what other comparable homes in the area have sold for in recent history. Recent history is usually like 6 months or less. So if if things in the area are selling for less, that could impact your appraisal and drag the overall appraisal down. Also, what could do that is the accelerated rate at which things are selling and prices going up. So, for instance, sometimes appraisals lag price increases, right? So prices are going up on materials faster than closings are happening to catch up with that, if that makes sense. So it can take a little while for the appraisals, the comparable sales, the comps, to catch up with what's happening in the market. It's a lagging indicator. There's your Jim Cramer economics for the day. I won't do that anymore.
All right.
Well, I hope not.
Donna is asking, in 4 to 6 months, if the house appraises for more money based on increased cost of materials, would you have to come up with more money, not less? No. The appraisal has nothing, like Eric said, the appraisal has nothing to do with the cost of the home. The home costs what the home costs. This is just a separate check that we do to make sure that what we're building, is you're able to get a loan on, that we're not overbuilding for the area, and that you do have the equity requirement that you need.
Right, Donna. And again, like we said, once construction starts, your price is locked in. Like there's no price indication. Doesn't matter what happens in the lumber market. Doesn't matter what happens in the labor market. Your price is the price.
Your price is your price. Let's see. Wendy is asking, would a 401k statement be able to be used as proof of funds, or does it need to be in our bank account?
Okay, so she's probably asking typically for a cash transaction or a large down payment. Typically, we're going to require that be in a bank statement because it would depend on the amount of the 401k, but that's usually always been in an actual bank statement. We want to see that the money, because we know there's penalties associated depending on one's age and the way that you're structured to draw on that money. You could be penalized for taking that money out, which could put it below the amount that's necessary to cover the cost of the home. So when we're looking for a VOD, or a verification of deposit, most banks looking at that are going to want it to be an actual checking or savings, some type of liquid account, brokerage account, checking account, savings account, something that it's liquid assets. You can get to it and not be penalized by a percentage for taking that money out. Because we take 401k money out either ahead of schedule or ahead of when you qualify for it, you're not only, it's taxed at whatever your tax rate is, plus there's a penalty on top of that. I think 10% is the penalty on top of that. So,
okay.
Yeah, I'm not a CPA. Right. I'm not a tax accountant, not a tax advisor.
Very good. All right. Crystal and Derek are asking, is there a chance that the cost to build goes up between the time the contract is signed and closing time? Will we be responsible for the price difference? Just to clarify this, once you sign a contract with us, you are locked in for a good 4 to 5 months, as long as you are completing your responsibilities to get the home to construction. And that's explained in the contract and what those are. Once we start construction, your price is completely locked. It's not going to change at all.
Yeah.
All righty. So thank Aaron. That also answers your question when you lock in. And
some folks their prices are locked in when they do the agreement with us up front. I mean,
yes, yeah.
They do the agreement, their house starts, they go to closing, no delays.
Yeah, no problem. Yep.
Locked in the day they sign a contract with us, the day they give us a deposit. I mean, that's the goal, really. That's what we want. Mm-hmm. It's just when things start to delay, when you're doing build on your lot, there's a variable out there that we don't know a whole lot about, and that is your lot. We don't know how you acquired it. We don't know what the title looks like. We don't know what the loan looks like. We don't know what the land itself looks like. So that can drive, what's the municipality or the county or that precinct going to require, or that subdivision going to require. Mm-hmm. And so those are the variables we're talking about, because it sounds a little bit like it's unpredictable, and it's, by and large, it's not. 80 to more % of our homes start at the exact same price that they were contracted at. So
yep, absolutely. And then Lauren, just clarifying on appraisal, are we seeing low appraisals right now?
Not in most areas. We're actually not. Yeah. I talked to a couple of, in our show prep, as I said, I talked to several salespeople across the state, and they're not, because we were kind of worried about that, honestly, with the rate at which prices were going up. And we haven't really seen that. I mean, and again, fortunately or unfortunately, prices are going up on everything, including resales. And so go ahead.
Yeah, I was reading an article where actually the closest we've been historically in the cost between an existing home and a new construction home. So all the activity is actually benefiting us because there are so many closings and the prices are going up. We're able to get the appraisals
And by
now.
existing homes, you meant to say used COVID infested
Used homes. Yes, used homes. Resale.
Someone else's dream home.
Jackie is asking if I'm planning on having a metal shop built at the same time as home construction is going on. Would I pull a separate permit or does the one Tilson pulls cover that?
Great question, Jackie. It actually depends on the county. Some counties, they don't care, like Grimes County, for instance, which is just kind of northwest of where we are. They don't need you don't have to have a permit at all for a shop or metal building, as long as there's no bathroom or something like that in it. But for a home, you do. So it really depends on the county in which you're building. Some counties, any improvement whatsoever, any building, any square footage at all you're going to be building, they want a permit for it. So I know you're saying Waller County, they may very well require. It's a super simple phone call. Call them and ask, or call your consultant, and Wendy or somebody can call and ask, hey, will our permit cover the shop? Again, they're going to ask, is that shop going to have any kind of a bathroom or water or anything like that hooked up to it? And that starts to get, they start to get pretty nosy then, because they want to know what you're going to do with the wastewater.
Right. Yeah, that's fair. Aaron is saying, you mentioned 4 to 6 months out from contract. At what point in that would we get pre-qualified and saving for the 10%?
Pretty early on, Aaron. Usually we'll know in the first month to 6 weeks, basically when that appraisal gets back. It usually takes about 7 weeks to get that appraisal back from the lender, depending on how fast you can get your paperwork to the lender. But as soon as we have that appraisal back, that pretty well determines all of that. Because that's okay. The appraised value is what drives that 10% number.
Okay. When winds or weather damage construction while in progress, do you have the coverage, and what procedures do you implement to make things correct to allow the construction to continue?
Yes. So we have we carry builder's risk insurance on all of our homes, which is, and actually that's different because some builders require the customer get the builder's risk insurance. Either way, you definitely want builder's risk insurance because, I mean, hail damage, wind damage, flood damage, those things all happen. And
absolutely.
June, November, which we're entering that season, that's called hurricane season. So there's actually even a different type of insurance we have to have in counties that border the coast. And we carry all that on every home that we have under construction. So obviously if something happens, we're covered. We send the adjuster out just like any other insurance claim. We assess the damage. They determine how it has to be done. Then if we have to get an engineer in, we will. That's pretty rare. We ever had to do that. We've been doing this for the better part of a century. We can typically tell what needs to be done to get a house ready to go. So.
Okay, great. Vic is asking to see a graphic. There's a little bit of delay between when you ask and when I see your question. So if you could just clarify which graphic you want to see, I'll be happy to show it again.
The yellow ones in the PowerPoint.
Yeah, I'm sure. Let's see. Jesse is asking, can you give a brief summary of things that need to be accomplished after the contract is signed and closing?
Dawn can. We have a form we're working on.
We do. We have a list of things. Find my copy.
All right. So there's a couple of things. I'll start while she's looking. But, biggest ones, like, because signing contracts, contract and closing is a long time. But certainly when you sign, a copy of the deed, a copy of your survey, a valid survey. We'll need that pretty early on. We need all the corners flagged. We're going to do, of course, there's a lot of things that we're going to do. But a copy of your deed restrictions, we'll need that. If you use a title company when you close, that would be great. Your 911 address from your county, power company, water company, getting your lender paperwork in and completed, getting your plans signed whenever we call you and say, hey, your plan's complete, come in and sign them. The brief summary. You ask Eric for brief. Those two words don't collide in the same sentence. So sorry, Jesse. And the reality is there's nothing brief. The process is not brief, unfortunately. Any builder knows who it is, either hasn't done it very much or is misleading you. There's a lot going on. The good news is we're here every step of the way with you. But
yes, absolutely.
Those are things. And then they will have to update a lot of those prior to closing, mainly on the financial side. So usually as you get about 30 to 60 days out from closing, they'll start asking for re-verification of, hey, are you still employed? you're still getting paid what you were getting paid when we approved you. So they'll ask for pay stubs again. They'll ask for bank statements again. They may ask for retirement statements. They may not. They may pull credit again. In fact, they are doing that very close to closing these days, right, Dawn?
Yeah, it's usually like 3 days before.
Yeah. So don't go out and buy a bunch of new furniture beforehand. Don't do that. So those are the main things.
Mm-hmm. Then there's some land prep items. Before you have your site evaluation, we're going to want you to have the land kind of underbrushed where you want to put your house. If you know for sure where you want it, go ahead and clear it, so we can take those grade shots. And then when you meet with your land prep specialist, they're going to tell you the other stuff that needs to be done to your property, how to get all weather access so that we can get the soil test done. And just have that land prep for the heavy equipment, all of that kind of stuff, and all the other to-do lists that they'll give you. But we're gonna guide you along the whole way.
Mm-hmm.
All righty. And then Jen is asking, on the flip side, if we sign a contract and lumber prices go down, could that affect the price favorably? So would your price go down if lumber prices went down?
All right. Great question, Jen. A lot of people were asking that. I want to be very clear about this. The prices of homes are not going to go down in the foreseeable future, particularly new construction. New construction will be the last ones to go down if they go down. Historically, they do not go down. Even in the crash of 2008, 2009, 2010, the price to build a new home never went down.
No.
There was excess inventory in like sandy states, Arizona, Las Vegas, Florida, those places. Mm-hmm. And they were giving away homes because there was more supply than there was demand. But the cost to build the house never went down. The cost to build a new home is not going to go down. Even if lumber prices settle or go down, that's not all that's happening. Is a bunch of other things that have been going up that builders have been absorbing. They're going to increase the costs to accelerate those. Concrete, steel, sheetrock, labor, those are all going up. And right now, builders are just absorbing them in a lot of places because lumber's going up so quickly. Lumber's getting all the attention because it's gone up the fastest. So it's up 250% since April of 2020, 13 months. That's why lumber's getting all the press. It is not the only thing going up. So prices aren't coming down. They're not. Yeah. Not going to come down.
Okay. And we have a question. Who makes the fair determination as to the construction completion date, and who is responsible for making this date come to life? CMG tries to tie it into 60 days out to firm rates. There's a huge cost of construction goes 60 days. So it's all timing, I assume. However, weather and location seems to create unforeseen delays. But there's this timing crunch when the pressure escalates to close prior to the 60-day mark.
Yeah, so it's a great question, Deco.
Great question.
There's not, we don't guarantee a completion date, period, for all the reasons that you just listed. There's too much unpredictability out there to be able to do that accurately. Now, what I will say is that I've never heard of CMG Financial or AMCAP, for that matter, having a hard time getting a customer where they need to be on the loan. I mean, certainly, we don't encourage our customers to lock in until a certain time. We always tell you, hey, call your builder first. Do not lock in your rate until you talk to your building superintendent, your project manager at Tilson, because we know when we're 30 days out, 60 days out pretty well. Now that's getting a little bit harder to predict, actually getting a lot harder to predict with material availability and labor availability right now. But we still have a pretty good idea, after the cabinets go in, we can start dialing in pretty close when that house is going to be completed, so long as the homeowner has all of their responsibilities done. If there's any kind of utility hookups that need to be done that are homeowner required based on phone calls, that kind of stuff, those will all need to be done. Final driveways in, which I know is a challenge with weather, getting a final driveway in, that's a struggle right now. So again, CMG, they're not going to quote, from a lender perspective, they're probably not going to quote out a firm locked rate out more than 60 days because who knows what the rates are going to be. There's nothing to indicate they're going to go up. Everything the Federal Reserve is doing and the Fed, all that is happening. It indicates they're going to keep them the same, but there's no guarantee. And so, yeah, there's unfortunately, that's going to be between you and the lender. And we'll tell you how long about it's going to be, but we don't we don't encourage you to lock in your rate until you've spoken with your building superintendent with Tilson, based on how things are going.
Okay. Makes sense. And then he's also asking, I saw you tore down the Hidalgo in San Marcos. What is going to replace it? It is being replaced with a brand new plan. We are finalizing that as we speak, and then we'll go into permitting with San Marcos to get that built for you. But yeah, it's going to be a brand new 4-bedroom home out there at the San Marcos Design Center.
Yep. Yeah, I saw one that it did appraise for $45,000 less. Yeah.
I did see that.
Sure can happen.
Unfortunately, it can happen if we don't have the comparable homes in the area to support it.
Yep. And Deborah,
that is, I got one more question. Deborah's asking, can the lot be used as part or whole of the down payment?
Yes, it actually can. So in the little example that we did, that is what we talked about, but I can do either kind of example you want to do. But yeah, you're basically looking at in this one here that Dawn put together. You got a total value. The home price was $300,000. The land value is $75,000. So total value is $375,000. These folks happen to have $40,000 paid into the land. All they would really need would be $37,500, which is 10%. So yeah, in this particular example, the $40,000 they have paid into the land is enough to cover any type of down payment they would need. All we need is the 10% down payment. So.
Yep, absolutely. Hugh is asking, we have a well house built by Tilson as well. We won't be able to get the water well ready until the well house is completed. Will that affect the build process?
Could. Yep, it could. So, I mean, the water well doesn't have to have a well house around it. But if that's the order that you've arranged to do things, that certainly can. But a well house doesn't take a very long time to complete. It's pretty small. It's like 4x6 or 4x8. It's pretty little.
Okay. Faith is asking, you mentioned a final driveway. Is this something that is required because we are going to use gravel laid when the culvert went in?
Faith, we live out in the country. That is a final drive.
Yep.
Yeah. So dirt road, good. So what typically they won't count is a final drive is like a kind of a pig trail going across the grass. Like a lender is going to be like, that's not a driveway. But yes, a gravel drive, crushed rock, crushed concrete, something like that over culvert, rock drive.
Good to go.
Driveway, where we come from.
Wonderful. All right. Denise is asking, I want a 60/40 black composite kitchen sink. Tilson does not offer this option. Can I supply my own?
You cannot supply your own, but we can certainly inquire with our supplier, see what we can get. We can reach out to our countertop supplier and our plumber to see if we can get a black composite kitchen sink. So I bet we can track that down.
Perfect. Lauren is asking, in the case when the appraisal does come out low and you need to pay extra money, do you pay it at closing or before building?
Great question.
Great
Lauren.
question.
Prior to the start of construction. So we would have to have that. Any difference between the loan amount, or in this case, the loan amount and the contract amount must be paid prior to the start of construction because it's not being guaranteed by a lender. Now, in the past, we have taken that as a deposit before. If you can maybe get the loan increased later on, that's fine. But Tilson would have to you would have to pay that money to Tilson prior to us starting construction.
Okay, makes sense.
Or down on your land. If it was money owed on the land, you could pay the land down. Either way, it doesn't have to be to us necessarily.
Okay, that makes sense. And that is all the questions I see. So everybody, if you're still there and you have questions, type fast.
Last cover question. We did exactly an hour. So yeah, that was I know that's a lot of information, ladies and gentlemen. That is, but we do understand that this is the most kind of sensitive part of the whole process. How are we going to bridge that gap of getting the home we want paid for on the land that we dreamed of? So do not be bashful about asking questions to your sales consultant, to us. Hit us up on YouTube, Facebook, Instagram, our website, all 11 of our locations. We'll be happy to help you with any of those kind of questions. Because we understand and recognize that that's a critical part of the path, and we want you to be comfortable with that. And we have great lender partners that can help you understand that, help you get that accomplished. And we've done it for thousands and tens of thousands of customers, we can do it for you as well.
Mhm.
What other final parting thoughts do you have, Don, while I kill time to ask more questions?
I mean, that's really it. But yeah, don't be afraid to ask these questions. You've heard people talking about dealing with both Matt and Stephanie. We had comments on both of them, that they're great to work with, and highly recommend going with a preferred lender just to make the process a little bit smoother. And yeah, don't be shy asking us about it.
Right. So thank you for joining us today. Thank you for all your questions. Reach out to us on all of our different mediums that Dawn has and her team have so perfectly put together. We got the website, like I said, Facebook, Instagram, YouTube, all of those places, and obviously all 11 locations. Yep, we think the world of AMCAP too. Thanks, Jen.
Absolutely.
Anyway, and we genuinely soon hope make you part of the Tilson family. See y'all later.